Good morning. We will do the entries of Storm Traders today. If we look at transaction number 1, the owner deposited 10,000 to increase his capital contribution. That means that the business received money. So if he deposited money into the bank, the business received money. So the one entry will be in the bank account because the money in the bank increased when we deposited. Bank is an asset, so assets increase worth 10,000 with the additional money in the bank. If the owner contributes capital, the double entry will be recorded in the capital account. Capital increases equity, so the amount of money that the business owes the owner will increase with 10,000. When we receive money, the business will issue a receipt as proof of payment. Any money received will be recorded in the cash receipts journal. Transaction number 2. Issued a check to the City Council to pay electricity. Here we pay out money, so a check was issued, so the money will be taken out of the bank. So the one account will be bank. The expense that we pay is electricity, so the double entry will be in the electricity account. We issue a check, so our source document is check counterfoil. If we pay out money, all the entries where money is paid is recorded in the cash payments journal. The expenses increase on the debit side, so electricity will be debited. Money was taken from the bank, so the bank is credited to decrease the asset. Electricity decreases profit, so the equity decreases with 180. Bank is an asset. We have less money in the bank, so assets decrease with 180. If we look at the accounting equation, the effect of the money that was taken out of the bank will decrease the assets because there's less money in the bank. The owner's equity will decrease because the profits that the business will make will reduce with 180 rand. In the ledger, we will show that the money was taken out of the bank, so the bank account is credited with 180 and the electricity account is debited with 180. Bank decreases on the credit side with 180. The word that we write there is electricity to indicate that the double entry was completed in the electricity account. If we look at transaction number 3, the owner donated goods to the local school. Although the owner donated the goods were donated on behalf of the business. So the one account that we will use will be donations to show that it is expense for the business. Inventory will also be affected because goods were given to the school as a donation. If we look at this entry, it means that we will show that our inventories decrease and that donation increase. The donation account will be debited because expenses increase on the debit side. Inventories account will be credited because inventories reduced. Donation is an expense that will reduce the profit, so equity will decrease with 50. Inventories is an asset. We have less inventory, so the assets decreased with 50 rand. This entry can't be completed in any of the other journals because there's no money involved and we didn't buy or sell goods. Any entry that does not fit in another journal will be recorded in the general journal. And the source document will either be a journal voucher or a journal narration that will explain why this specific entry was completed. The inventories will decrease the assets with 50 Rand because we don't have the inventories anymore. And donations is the expense that will decrease the equity because the profits will decrease. We will show that the inventory account is credited with the 50 Rand to reduce the inventories on the credit side, and donation is debited with the 50 Rand to increase the expense on the debit side. The next transaction that we will do is for sales. You have to determine whether it's a cash transaction or a credit transaction. And they say here cash register roll, that indicates that it is a cash transaction. So the one entry will be bank because the money was received in the bank. So the bank account will be debited. We sold goods, so the account that's credited will be sales. Bank is an asset. We've got more money in the bank now, so the assets increased with 3,600. Sales is an income that will increase the profits, so the equity will increase with 3,600. If we sell goods for cash, we will either issue a cash register roll to the client or a cash invoice. And any money received will be recorded in the cash receipts journal. When we sell these goods on credit, we have to determine what is the cost price of the goods. Now remember that the sales price is 3,600. We make a profit of 50% on cost price. It is important to determine whether the profit is made on sales price or the profit is made on cost price. Because the profit is on cost price, it means that cost price equals 100%. So if we look at the calculation, the cost price equals 100 because the profit was made on cost price. There's a profit of 50%. That means I must add the 50 to the 100, and my sales price then equals 150%. They gave me the sales price as 3,600. If I wanted to calculate the cost price, I take the 3,600, multiply it with the one that's needed, and we need the cost price. So it means that I will multiply with 100 over the one that's given, and the 150 was given, so I divide by 150. And that will give me the cost price as 2,400. So if I record this entry, I will show that cost of sales is debited with the cost price because it's an expense. Inventory is credited because we reduce the inventory. So cost of sales is an expense that will reduce the profits, so the equity will decrease with 2,400. Inventories is an asset. I've sold the goods, so I've got less inventories, so my assets decrease with 2,400. I will use the same cash register roll to determine the cost price, and I will also record that in the cash receipts journal. This means that the bank account is debited because we increased the bank with 3,600, so my assets increase with 3,600. Sales is an income, so my profits and equity increase with 3,600. Inventories decrease because we reduced the inventories when we sold some of it, so my assets decrease with 2,400. Cost of sales is an expense that will reduce the profits, so my profits will decrease, and therefore my equity will decrease with 2,400. So when we sell goods, whether we sell it for cash or credit, we will always complete two double entries. One at the sales price and one at the cost price. Remember, the one at the sales price will be the sales will increase because that is the income that we receive, and either bank or debtors control will be debited. When we sell goods, it means that we debit cost of sales because the cost of sales decreases the equity, and we show that inventories is also at cost price because when we buy inventories, we record it at cost price. When we sell inventories, we reduce the inventories at cost price. In the ledger, we will also record two entries. The first entry will be for the sales at the sales price, and we will show that the bank received money, so we will increase the bank with 3,600, the actual amount of money that we received, and we will increase sales with 3,600. Then we will show that the cost price of the goods is 2,400, so we will increase cost of sales to increase the expense, and we will decrease inventories because we want to decrease our asset. Remember that the word that you write in the inventory account will be cost of sales to show that this double entry you will find in the cost of sales account. So in the cost of sales account, you will use the word inventory to show that the double entry is in the inventory account. For the next entry, we will issue a check for goods purchased. So that means that we bought these goods for cash and we paid for it immediately. So issue a check shows that the bank will be one entry because I reduced the money in the bank. Then I buy goods, so inventory will be my double entry. If I issue a check, the source document will be a check counterfoil. If I pay money out of the business, it will be recorded in the cash payments journal. Inventories increased because I bought more inventories, so my assets increased with 3,600. I've taken the money out of the bank, so I must show that the bank decreases on the credit side, and my assets decrease because I have less money in the bank. So what did we do here? We change one asset bank into another asset inventory. So we change the one asset into another asset. If I record it here, I will show that the bank decreased because we have less money in the bank, and that inventories increase because we bought more inventories. In the ledger, I will also have to show that the inventories increased with 3,600 and that the money in the bank decreased with 3,600. So I've taken money out of the bank. Bank increases on the debit side and decreases on the credit side. We will now complete the next transaction. And in this transaction, we pay insurance. So if we look at this transaction, we issue a check. So that means that the one entry will be in the bank because we issue a check. And what do we pay? Insurance. Now remember, if you look at this sentence, they talk about insurance premium because that is what we call the amount that we pay to the insurance company every month. But the ledger account is only called insurance. So don't call the ledger account insurance premium. It must only be insurance. So here we use a check counterfoil. When we pay out money, it will be recorded in the cash payments journal. The expense is insurance. I've taken money out of the bank. Insurance is an expense that will reduce my profit, so my equity will decrease. Bank is an asset. Because I've taken money out of the bank, my assets decreased with 600 Rand. The bank decreased with 600 Rand because we've taken money out of the bank. Insurance is an expense that will decrease the profits, so my equity decreased with 600 Rand. If we look at the ledger accounts, we've taken money out of the bank, so we will credit the bank to show that the asset decreased on the credit side, and we will debit insurance because expenses increase on the debit side. If we look at the last transaction, we see that a check was issued for 1080. So if we pay by check, the one entry will be in the bank. We issued a check to the Gama traders in settlement of the account, so it means that we are paying our creditor. So the source document will be a check counterfoil. If we pay out money, it's recorded in the cash payments journal. My liabilities decrease now because I owe less money to the creditor, so liabilities decrease. And if I want to decrease liabilities, I decrease it on the debit side. So liabilities increase on the credit side and decrease on the debit side. And I take the money out of the bank, so I will credit the bank, and that will reduce the amount of money that I have in the bank, so my assets will decrease. The money was taken out of the bank, so the bank decreased my assets, and we owe less money to the creditors, so my creditors and my liabilities decreased. In the ledger, I will show that the money was taken out of the bank. So the bank is credited to reduce the amount of money in the bank. And I will debit creditors to show that my debt that I owe to the creditors was reduced.